There are 10 states in America where retirees can legally pay $0 in property tax. Forever. Not reduced, not discounted, not frozen at some lower level. 0. You own your home. You live in your home. You never write another property tax check for the rest of your life. Sounds impossible, right? Sounds like one of those internet scams. Too good to be true. Must be a catch. There are catches. We'll get to every single one of them. But the programs are real. The savings are real. And right now, millions of seniors are paying property taxes they don't have to pay because nobody told them these programs exist. Your neighbor might be paying 0 while you're paying $6,000 a year. Same street, same age bracket, different knowledge. Let me show you which states, which programs, and exactly what you need to qualify. If you're retired, approaching retirement, or thinking about where to spend your retirement years, subscribe. We track the property tax exemptions nobody advertises, the state programs that could save you tens of thousands of dollars over your retirement, the fine print that determines whether you qualify or get shown the door. No fluff, no clickbait promises, just the real programs with the real requirements. Hit subscribe, takes 1 second. Let's find out if your state made the list, or if you should be moving to one that did. Property taxes are the silent killer of retirement budgets. You worked for 40 years, you saved, you sacrificed, you paid off your house. No more mortgage, no more writing that check to the bank every month, no more interest payments disappearing into someone else's pocket. You own it, free and clear. You thought you were done paying for your home. Then January comes, the envelope arrives. You know the one with your county's return address, the one that feels heavier than it should. You open it. $4,000, $6,000, $8,000, $10,000 in some places. Due in full every single year for as long as you own that house. You paid off the mortgage, but you'll never pay off the property tax. That bill is forever. For seniors on fixed income, that bill can be devastating. Social Security brings in $24,000 a year. Property taxes take $8,000. A third of your income gone before you buy groceries, before you pay utilities, before you fill a prescription. People lose homes over this. Homes they paid off decades ago. Homes they raised families in. Homes they planned to die in. Not because they couldn't afford the house, because they couldn't afford the tax on the house. But some states looked at this situation and said enough. Seniors who've paid taxes their whole lives shouldn't be taxed out of their homes in retirement. They created programs, real programs, legal programs, programs that can take your property tax bill all the way down to 0. But here's what the clickbait articles don't tell you. 0 property tax isn't automatic in any of these states. Every single one has requirements, hoops you have to jump through, age minimums. You have to be old enough. Income limits, you can't make too much money. Residency requirements, you have to have lived there long enough. Application deadlines, you have to file paperwork by a certain date. Miss any of them, any single one, and you pay full price. Full price while your neighbor who figured it out pays nothing. Same house, same block, different outcome, because one person knew the rules and one person didn't. Now, most states have some kind of senior property tax break. A small exemption, a few $100s off your bill, maybe $1,000 if you're lucky. Better than nothing, but not life-changing. These 10 states went further, much further. They created programs that can actually eliminate your entire property tax bill, not reduce it, eliminate it, and they do it through different mechanisms. Some states offer complete exemptions for qualifying seniors. Hit the right age, meet the income requirement, and your bill goes to 0. Done. Some states use assessment freezes. Your home's taxable value locks in place when you turn 65. Market goes up, your value doesn't. Over 20 or 30 years, the gap between your frozen value and current market value becomes enormous. Your bill shrinks to almost nothing. Some states use circuit breakers. They limit your property taxes to a percentage of your income. Make $20,000, your property tax might be capped at 5 or 6% of that. The state refunds the rest. Some states use deferrals. You don't pay now, the state pays for you. They put a lien on your home. When you sell or pass away, the bill comes due, 0 out of pocket while you're alive. And some states use combinations. Stack multiple programs on top of each other, exemption plus freeze plus circuit breaker. Layer them until the bill disappears. The mechanism is different in each state. The result can be the same: $0 owed, forever, legally. But before we get to the list, you need to understand something important. Zero property tax doesn't always mean zero cost. Some of these programs are deferrals, loans against your home that come due when you sell or die. Your heirs inherit a bill. Some have income limits so low that middle-class retirees don't qualify. You saved too much, you did too well, now you pay full price. Some require you to have lived in the state for years, sometimes a decade, before you're eligible. Just move there, get in line. The devil is in the details, and I'm going to show you every devil. Let's get real about who these programs are actually designed for. They target specific groups: low-income seniors, long-term residents, disabled veterans, people who need help the most. If you're a wealthy retiree who just moved to a new state with $1 million home, most of these programs won't help you. You have resources. You can pay. If you're a modest income senior who's lived in the same home for 30 years, watching your property taxes climb while your Social Security stays flat, some of these programs could change your life. Here are the key variables that determine whether you qualify. Age. Most programs require 65 or older. Some allow 62. Some have lower age requirements for disabled residents. Income. This is where most people get tripped up. Limits vary wildly from state to state. Some cap you at $20,000, some at $50,000, some at over $100,000. What counts as income varies too. Some states count Social Security, some don't. Residency. How long have you lived in the state? Some programs just require it to be your primary residence. Some require 5 years of residency. Some require 10. Home value. Some states cap the value of homes that qualify. Your modest 3-bedroom qualifies. Your waterfront estate doesn't. And the most important variable of all, application. Every single one of these programs requires you to apply. Not one is automatic. The county doesn't know you turned 65. They don't know your income dropped when you retired. They don't know you've lived there for 20 years. They know nothing until you tell them, until you file the paperwork, until you prove you qualify. No application, no exemption, period. 10 states, 10 different paths to zero property tax. Some are straightforward exemptions. Hit the requirements, get the benefit. Some are complex stacking strategies. Combine multiple programs until the math works out. Some are traps disguised as relief. Zero today, big bill later. Let's go through them one by one. What you get, what you need, and what can disqualify you. Section 2 covers the first 5 states on the list. We'll start with the state that offers one of the most generous senior exemptions in America: complete elimination for qualifying homeowners, age, and residence. That's it. Then we'll cover the state where disabled veterans with any level of service-connected disability can pay nothing, zero forever. Then the state with a value exemption so large that modest homes are completely exempt. Then the state with a circuit breaker that refunds taxes exceeding a percentage of your income. And then the state that will literally pay your property taxes for you, zero out of pocket. But there's a catch that could cost your children their inheritance. Every state has a path to zero. Every state has catches that could disqualify you. Let's see which ones you might actually qualify for. 10 states where retirees can pay zero property tax. Let's start the countdown. For each state, I'll tell you exactly what the program offers, who qualifies, and what can disqualify you. No sugarcoating, no leaving out the catches, the full picture. State number 1, Alabama. Alabama might surprise you. It's not a state that usually makes headlines for being tax-friendly. But for seniors, Alabama offers one of the most straightforward paths to zero property tax in America. Here's what you get. If you're 65 or older, Alabama exempts your primary residence from state property taxes completely. Not reduced, not capped, exempt. And here's where it gets better. Many Alabama counties extend this exemption to cover county and municipal property taxes too, not just the state portion, all of it. Who qualifies? Age 65 or older, that's the main requirement. Primary residence, you have to actually live there. No vacation homes, no rental properties, the house you sleep in every night. Income limits vary by county. but many counties have no income limit for the basic senior exemption. You qualify by age, not by poverty. Here's the catch. Alabama is a county-by-county patchwork. The state exemption is standard, but county and municipal taxes, those rules vary. Some counties exempt everything for seniors. You pay zero, done. Some counties only partially exempt. You get a reduction, but not elimination. Birmingham is different from Mobile, is different from Huntsville, is different from rural counties in the middle of nowhere. You have to check your specific county, call the county tax assessor's office, ask exactly what you qualify for. The second catch, you have to apply. The county doesn't know you turned 65. They don't know it's your primary residence. They know nothing until you file paperwork. Go to your county tax assessor, bring proof of age, bring proof of residence, fill out the application, get your exemption. Miss the application and you pay full price, while your 66-year-old neighbor who figured it out pays nothing. Alabama is one of the most straightforward paths to zero, but the county you live in matters, and you have to actually apply. That's state number 1. State number 2, Texas. Texas is famous for high property taxes, some of the highest in America. People complain about Texas property taxes constantly. But for one specific group, Texas offers complete elimination: disabled veterans. Here's what you get. If you're a veteran with a 100% disability rating from the VA, Texas exempts your primary residence from all property taxes, completely, forever. Not the state portion, not part of the bill, all of it. School district taxes, county taxes, municipal taxes, special district taxes, all of it, gone. Zero. Who qualifies? Veterans with a 100% service-connected disability rating from the VA. Also, veterans rated less than 100% but deemed unemployable due to service-connected disability. If the VA says you can't work because of your disability, you qualify even without the 100% rating. The exemption applies to your primary residence. No dollar limit on home value. You could have a $500,000 house, still zero. Here's what happens at lower ratings. If you're a disabled veteran, but not at 100%, you still get help, just not complete elimination. 70% disability rating might get you $12,000 off your assessed value. 50% might get you $10,000 off. The exemption scales with your disability rating. Helpful, real money, but not zero. The 100% rating is the magic number for complete elimination. Surviving spouses. If the veteran passes away, the surviving spouse can continue the exemption as long as they don't remarry and continue living in the home. The protection extends beyond the veteran's life. The family stays protected. Here's a bonus for all Texas seniors. Even if you're not a disabled veteran, Texas offers a property tax freeze for seniors 65 and older on school district taxes. Your school taxes freeze at the year you turn 65. They never go up again. Values climb, rates increase, doesn't matter. Your school portion is locked, not zero, but frozen, which over time becomes increasingly valuable. Texas is brutal on property taxes for most people. The bills are legendary. The complaints are constant. But if you're a 100% disabled veteran, Texas becomes one of the best states in America. Zero, forever, as a thank you for your service. That's state number 2. State number 3, South Carolina. South Carolina takes a different approach. They don't care about your income. They care about your age and your home's value. Here's what you get. The homestead exemption eliminates property tax on the first $50,000 of your home's fair market value. If your home is worth $150,000, the first $50,000 is tax-free. You only pay on the remaining $100,000. That's a third of your value completely exempt. Who qualifies? Age 65 or older, or totally and permanently disabled at any age, or legally blind at any age. Must be a legal resident of South Carolina, must be your primary residence. Here's the path to zero. In lower cost areas of South Carolina, if your home is worth $50,000 or less, your property tax is zero, completely eliminated. The exemption covers the entire value, nothing left to tax, zero. For higher value homes, you still pay on the value above $50,000, but the exemption provides significant relief regardless. A $200,000 home only gets taxed on $150,000. A $100,000 home only gets taxed on $50,000. Real savings. Every year. Forever. Here's what makes South Carolina unusual. No income limit. Unlike most states that tie exemptions to how much you earn, South Carolina doesn't care. You qualify by age, not by income. You could have a pension, Social Security, investment income, rental income, doesn't matter. If you're 65 and it's your primary residence, you get the exemption. That's rare. Most states make you prove you're poor enough. South Carolina just asks if you're old enough. The catch. This works best for modest homes in affordable areas. If you have a $700,000 home in a wealthy Charleston suburb, you still owe taxes on $650,000 in value. That's a big bill. The $50,000 exemption helps everyone, but it only gets you to zero if your home value is $50,000 or below. South Carolina rewards retirees who chose affordable housing. Modest home plus senior exemption equals zero property tax. That's state number 3. State number 4, Maine. Maine does something different from the first 3 states. They use what's called a circuit breaker. Instead of exempting property or freezing values, Maine limits your property taxes to a percentage of your income. If your taxes exceed that percentage, the state refunds the difference. Here's what you get. The Property Tax Fairness Credit refunds property taxes that exceed 6% of your income. If you're 65 or older, that threshold drops to 4%. Make $25,000 a year. 4% is $1,000. If your property taxes are $2,000, Maine refunds you up to $1,000. Who qualifies? Maine residents, primary residents. Income limits apply roughly $57,000 or less, depending on your filing status and household size. The path to zero. If your income is very low and your property taxes are moderate, the refund can cover most or all of what you paid. Very low income, very high tax relative to that income. The circuit breaker kicks in and the state makes you whole. Here's the first catch. It's a refund, not an exemption. You pay the property taxes first, out of your pocket in full. Then you claim the credit on your state income tax return. Then you get the money back. You need the cash flow to pay up front. If you don't have the money to pay the bill in the first place, the refund coming months later doesn't help you avoid late fees or penalties. The second catch. There's a cap. Maximum refund is around $1,500. If your property taxes are $4,000 and you qualify for maximum relief, you still owe $2,500 out of pocket. The cap limits how much the state will give back. Maine's circuit breaker helps low-income seniors significantly. It can reduce your effective property tax to near zero. True zero is possible, but only with very low income and moderate tax bills that don't exceed the refund cap. That's state number 4. State number 5, Massachusetts. Massachusetts takes the most aggressive approach on this list, but it comes with the biggest catch. The state will literally pay your property taxes for you. Zero out of pocket forever. But there's a price. Here's what you get. The Senior Tax Deferral Program, also known as Clause 41A, allows qualifying seniors to defer their property taxes indefinitely. You don't pay. The state pays on your behalf. Your property tax bill shows zero owed by you. You stay in your home, you write no checks, you owe nothing while you're alive and living there. Who qualifies? Age 65 or older. Income limits vary by municipality, but typically around $64,000 or less. Must have lived in Massachusetts for at least 10 years. Must have owned and occupied the property for at least 5 years. Here's how it actually works. The deferred taxes become a lien on your property. The state is essentially giving you a loan secured by your home. Interest accrues on the deferred amount, currently around 4% annually. When you sell the house, the lien gets paid first, before you see any proceeds. When you pass away and your heirs inherit, they inherit the lien too. They have to pay it off before they can sell, or it gets paid from the estate. Here's the catch, and it's a big one. This is a loan, not forgiveness, not elimination. You're borrowing against your home equity to pay your property taxes. The balance grows every year. Taxes plus interest, plus more taxes, plus more interest. Defer $5,000 a year for 15 years. That's $75,000 in deferred taxes. Add 15 years of compound interest at 4%. You might owe over $100,000 when the bill comes due. Your kids thought they were inheriting a $400,000 house. They're actually inheriting a $400,000 house with a $100,000 bill attached. Who is this good for? Seniors who want to stay in their homes no matter what, who don't care about leaving maximum equity to heirs, who need zero cash outflow to survive. The house sells after they're gone, the lien gets paid, whatever's left goes to the family, that's fine with them. Who should be careful? Anyone who wants to leave the house to their children free and clear. Anyone who might need to sell and access the equity for medical care or long-term care. Anyone who doesn't fully understand they're taking out a loan against their home. Massachusetts gives you zero out-of-pocket today. That's real. That's valuable for people who need it. But your estate pays eventually, with interest. Your heirs inherit the bill. That's state number 5. 5 states, 5 different paths to zero property tax. Alabama's straightforward age-based exemption. Check your county. Texas's complete elimination for 100% disabled veterans, plus a freeze for all seniors on school taxes. South Carolina's $50,000 value exemption with no income limit works best for modest homes. Maine's circuit breaker that refunds taxes exceeding a percentage of your income. Caps apply. Massachusetts' deferral program that pays your taxes but creates a lien. Loan, not forgiveness. Each one real, each one with catches. Section 3 covers the final 5 states, including the state with a $150,000 exemption. The state where county choice determines everything. The state with a freeze so powerful longtime residents pay 1990s tax bills. And the state where every town sets its own rules, creating pockets of zero tax retirement havens, plus the exact action plan to claim these benefits. Because knowing about them does nothing. You have to apply correctly, on time. That's next. 5 states down, 5 to go. These last 5 include some of the most powerful property tax programs in America, including one state with an exemption so large it covers most homes entirely. And one state where choosing the right county versus the wrong county can mean the difference between zero taxes and thousands of dollars. Let's finish the list. State number 6, Alaska. Alaska does things differently than the lower 48. That includes property taxes. Here's what you get. The senior property tax exemption can eliminate taxes on the first $150,000 of your home's assessed value. $150,000. Not $50,000 like South Carolina, $150,000. In most parts of Alaska, that covers the entire home. Your property tax bill goes to zero. Who qualifies? Age 65 or older, or age 60 or older if you're the widow or widower of someone who qualified. Must have been an Alaska resident for the full calendar year before you apply. You can't move there in March and claim the exemption that same year. The path to zero. If your home is assessed at $150,000 or less and your municipality participates in the program, your property taxes are completely eliminated. Even homes worth more get significant relief. A $250,000 home only pays taxes on $100,000 of value. Here's the catch. Not all municipalities participate equally. Alaska is locally controlled. Each borough, each municipality sets its own rules. Some fully participate with the full $150,000 exemption. Some offer less. Anchorage is different from Fairbanks, is different from Juneau, is different from small communities in the bush. Check your specific location before assuming you qualify for the full amount. Here's the bonus. Alaska also pays residents through the permanent fund dividend, an annual check just for living there. Some years over $1,000, some years more. That dividend can effectively cover whatever small property tax bill remains after the exemption. Property tax exemption plus annual dividend check. Alaska's combination makes it genuinely attractive for seniors. If you can handle the winners. That's state number 6. State number 7, Hawaii. Hawaii might seem like an odd choice for this list. It's famous for being expensive. Real estate costs are astronomical, but Hawaii has programs that can get qualifying seniors to zero. It just takes more work. Here's what you get. The basic home exemption reduces your assessed value significantly for owner occupants, over $100,000 off in most counties. Seniors 65 and older get an enhanced exemption up to $140,000 or more depending on which county you're in. Who qualifies? Owner-occupants using the property as their primary residence. Age 65 or older for the enhanced senior exemption. The challenge with Hawaii. Property values are extremely high. A $140,000 exemption on a $1 million home still leaves you paying taxes on $860,000. That's a substantial bill in a state with real property tax rates. The path to zero. Hawaii counties offer additional programs for low-income seniors that can bring bills to zero. Honolulu has a circuit breaker program. If your property taxes exceed a certain percentage of your income, you get relief. Other counties have similar targeted programs for seniors below specific income thresholds. The combination of the basic exemption plus the senior exemption plus the low-income programs can stack to zero for qualifying residents. Here's the reality. Hawaii is complicated. High property values work against you. You need to qualify for multiple programs and stack them correctly. This isn't a simple one-application path to zero like Alabama. But for seniors with modest incomes and lower value properties, which do exist in Hawaii, especially on the neighbor islands, zero is achievable. You just have to work for it. That's state number 7. State number 8, Georgia. Georgia is a perfect example of why you can't just look at state-level programs. You have to look at counties. Because in Georgia, the county you choose determines everything. Here's what you get. Georgia allows counties to offer senior exemptions that can completely eliminate property taxes for qualifying residents. Some counties offer total exemption from school taxes for seniors 65 and older. Some counties offer total exemption from county taxes for seniors with income below certain threshold. Some counties stack multiple exemptions until the bill disappears entirely. Who qualifies? Age 65 or older. Income limits vary dramatically by county. Some cap at $30,000, some at $50,000, some at $65,000 or higher. Must be primary residents. Must apply with the county tax commissioner. The power of county variation. Fulton County, which includes Atlanta, has different rules than rural counties in South Georgia. Cobb County is different from Gwinnett, is different from Cherokee, is different from counties you've never heard of. Some Georgia counties are retirement havens specifically because of their property tax policies. Seniors move there knowing they'll pay nothing. Other counties offer minimal help, same state, completely different outcome. The path to zero. Find a county with generous senior exemptions. Meet the income requirements. Apply correctly. In the right Georgia county with the right income level, your property tax bill is zero, completely eliminated. In the wrong county, you're paying thousands just like everyone else. The catch. Research is required. You cannot assume what's true in one Georgia county is true in another. Before you move, before you buy, check the specific county's senior exemption policies. Call their tax commissioner's office. Get the exact requirements in writing. Moving one county over could double your taxes or eliminate them entirely. Georgia is a patchwork. The right county equals zero. The wrong county and you missed the opportunity. That's state number 8. State number 9, Louisiana. Louisiana combines two powerful programs that together can bring property taxes to near zero or actually zero over time. Here's what you get. First, the homestead exemption. Louisiana exempts the first $75,000 of your home's assessed value from property taxes. $75,000 exempt for everyone. You don't even have to be a senior for this one. Second, the special assessment freeze for seniors. Once you turn 65 and your income is below the threshold, your assessed value freezes permanently. It never goes up again, no matter what the market does, no matter how much your home appreciates. Who qualifies for the freeze? Age 65 or older. Adjusted gross income below approximately $100,000. That's a relatively generous threshold compared to other states. The path to zero. A senior who enrolled at 65 with a home worth $75,000 or less pays zero from day one. The homestead exemption covers the entire value. For homes worth more, the freeze compounds over time. You enrolled when your home was worth $150,000, 75 exempt, you pay on $75,000. 10 years later, identical homes are worth $300,000. Yours is still assessed at $150,000 because of the freeze. You still only pay on $75,000. 20 years later, your neighbors pay on $300,000 or $400,000. You still pay on $75,000. The gap grows every year. Your effective tax rate compared to market value approaches zero over time. Here's the catch. Louisiana has no state income tax. That means property taxes and sales taxes fund more services than in other states. Rates can be higher than you'd expect. The exemption and freeze are generous, but the underlying rates mean you might still owe something unless your home value started low. Here's the long game. The earlier you enroll in the freeze, the more powerful it becomes. A senior who enrolled at 65 and is now 85 has a frozen value from 20 years ago. Their bill is a fraction of what neighbors pay. Someone who just enrolled gets today's value frozen. Still good, but the benefit compounds over time. Louisiana rewards long-term planning. Enroll early. Watch the freeze work its magic over decades. That's state number 9. State number 10, New Hampshire. New Hampshire is the ultimate local control state. Every town sets its own property tax policies, including exemptions for seniors. This creates wild variation and hidden opportunities. Here's what you get. New Hampshire allows municipalities to offer elderly exemptions that can significantly reduce or eliminate property taxes for qualifying seniors. Some towns exempt $150,000 or more of value for seniors 75 and older. Some towns have additional exemptions for seniors 65 to 74. Some towns combine these with disability exemptions and veteran exemptions for even larger reductions. Who qualifies? Age requirements vary by town. Some start at 65, some at 70. Some have the biggest exemptions reserved for 75 and older. Income limits vary by town. Asset limits may apply in some locations. Must be primary residence, must apply with the town. The path to zero. In the right New Hampshire town, a senior 75 or older with modest income and a moderate value home can pay zero property taxes. The exemption covers the full assessed value. Bill eliminated. In other New Hampshire towns, the exemptions are minimal. Same age, same income, dramatically different outcome. Here's the catch. New Hampshire has no income tax and no sales tax. Property taxes fund almost everything: schools, roads, police, fire, libraries. Property tax rates are among the highest in America as a result. The exemptions exist specifically because the rates are so high that seniors would otherwise be forced out. Some towns created generous exemptions, some didn't. Research is absolutely required. Don't just move to New Hampshire, move to the right town in New Hampshire. The town 1 mile down the road could have completely different exemption policies. Your tax bill could double or disappear based on which side of a town line you're on. Call the specific town's tax office. Ask exactly what exemptions exist. Ask what the requirements are. Get it in writing. New Hampshire is hyper-local, but the right town for the right senior means zero property tax, despite being a high-tax state overall. That's state number 10. 10 states, 10 paths to zero property tax. Alabama, Texas, South Carolina, Maine, Massachusetts, Alaska, Hawaii, Georgia, Louisiana, New Hampshire. Some through exemptions, some through freezes, some through deferrals, some through circuit breakers, some through stacking multiple programs. Each one requires you to qualify. Each one requires you to apply. The money is there. The programs exist. The only question is whether you'll take action. So here's your action plan. Step 1. Determine your state's specific programs. Not general information, not what you heard from a neighbor. The exact programs with exact requirements from official sources. Go to your state's Department of Revenue website, your county tax assessor's website, call them directly, get the details. Step 2. Calculate your qualifying income. Different states count income differently. Social Security might count in one state and not another. Tax-exempt interest might count. Capital gains might count. Calculate your income using the state's definition, not your definition. Step 3. Gather your documentation before you start. Proof of age, birth certificate, driver's license, passport, proof of income, tax returns, Social Security statements, pension documentation, proof of residency. how long you've lived there, utility bills, voter registration, whatever they require. Proof of ownership, deed, recent tax bill showing your name. Have everything ready before you walk in or start the online application. Step 4. Apply before the deadline. Every state has deadlines. Many are in spring, March, April, May. Miss it, and you wait another entire year paying taxes you didn't have to pay. Find out your deadline immediately. Put it on your calendar. Set reminders. Apply early. Step 5. Reapply if required. Some exemptions are permanent once approved. Apply once, you're done forever. Some require annual renewal, income verification every year, confirmation you still live there. Know which type yours is. Don't lose benefits because you forgot to renew. Step 6. Appeal if denied. If you think you qualify and got rejected, there's usually an appeal process. Maybe you calculated income differently than they did. Maybe documentation was incomplete. Maybe there was an error. Don't accept denial without understanding why and exploring your options. Here's the bigger picture. The best state for you depends on your specific situation. Your age, your income, your home's value, how long you've lived there, whether you're a veteran. No single state is best for everyone. But somewhere on this list is a state that could eliminate your property taxes forever. A state you might already live in, or a state worth moving to. The question isn't whether zero property tax is possible. It's possible. The programs exist. They're real. The question is whether you qualify and whether you'll actually apply. Your neighbor figured it out. They're paying zero. You're paying thousands. Maybe it's time you figured it out too. If this video showed you a state that could save you thousands of dollars, subscribe. We cover the exemptions nobody advertises, the programs hidden in the fine print, the money sitting on the table that most people never claim. Drop a comment. Which state are you in? Do any of these programs apply to you? Have you already claimed a senior exemption? I'm genuinely curious because millions of seniors are overpaying right now, and it doesn't have to be that way. Thanks for watching. See you in the next one. 10 states, 10 paths to zero property tax. Alabama, Texas, South Carolina, Maine, Massachusetts, Alaska, Hawaii, Georgia, Louisiana, New Hampshire. The programs exist, the money is real, the opportunity is there. You just have to claim it. Don't keep writing checks you don't have to write. Don't keep paying bills you can legally avoid. You worked your whole life, you paid taxes your whole life. You earned the right to keep your home without the government taxing you out of it. These 10 states agree. Now go get what's yours.